hectic week we had, right?
Quite
Up
a
and
week.
down. Yeah,
Quite
yeah.
a week. It was looking so well until it
It was
wasn't.
looking so well. It was looking so well, and then it was not. So let's just kind of go over what has happened so far.
Absolutely.
I'm looking at QQQ right now,
Yeah.
and it has given me an emotional roller coaster. Was hitting all-time highs.
Oh yeah.
The earnings were great. Microsoft and Meta really shot through the roof, and I was looking at the aftermarket, and I was so euphoric. But then, when the market actually opened, things just really did not align. And I think a lot of people felt dread seeing that fat red candle keep getting fat throughout the entire
huge.
day.
I mean, if you have a look at the even like the Nasdaq futures, you can just see a huge red candle. Huge.
Oh my god, yeah, I know. It
Yeah.
is. It's been pretty crazy. And honestly, on our posts, on X, we've been making these posts about how it was important for us to buy any Trump-induced dips, and why we personally still think that it's a good idea. It is important to be mindful of risk management, where you don't want to over leverage yourself. For those who are using margin, if you are buying the dip when it bounces on the KRM line, that's great, but make sure you have some buying power left when it breaks that support and it goes down to the oversold zones, right? So that has clearly happened. The first time it's happened in
looks like months.
For months, yeah. Exactly. For
Last
months,
time it
right?
broke structure, it was end of April.
April. So we had that liberation period, liberation in your capital, I guess, but liberation, and since then it has just been all-time highs. But unfortunately, this time it really did break support. And why I do think that this was a bummer, it was also necessary. You couldn't have all-time highs broken every other day, because at some point people
something had to give.
Yeah, right? Like, people will wonder, am I buying at the right values? Like, is this not overvalued? And we need to consolidate. And I think that's what's happening right now. My biggest fear, though, is that it just consolidates, and then it breaks down, or it just continues selling nonstop.
Yeah, the Liberation Day scenario, right? Just
Exactly,
repeat
right?
of it. Yep.
Exactly, right? So that's the biggest fear right now. So I think that just seeing so far, based on a lot of the news, it's not been looking great. But if we can just have a massive sell-off that's short term, we can easily rip up from here as shorts cover and as markets begin to consolidate and buy into these new elevated levels that haven't been seen, since liberation period.
Let's do a bit of recap. Let's start with like what happened this week, and I think from here I want to take it in like in my eyes, three different visions of how the future will play out. So I think this week we had great momentum. Monday and Tuesday was a little bit suspect. We saw the pre-market always opening high, and as the day progressed, it would always lose confidence, lose momentum. And when the earnings finally did hit, along with the FOMC decision, and it did not cut the rates, but despite that, I think during the conference we did hear not some words, but we did get the impression that there would not be a rate cut. Now they're still looking at data, and so that drove the market lower. But the moment the markets closed and we got the first earnings from Meta and from Microsoft, wow, that was quite a time. I think we saw both of these equities jump around 8-10% in just one day. And I think we spoke about this last week in last week's podcast. We attributed this to once again AI revenue, because a lot of their cloud compute is getting a lot of traction and a lot of revenue. And number two was about how much they are spending for future AI capabilities. Imagine spending for the infrastructure. So you have Meta with their super team. You have their Manhattan-sized factory for AI data center. You had Microsoft, which is a firm, competitor, Microsoft Azure for cloud compute, and so things were great. What happened Thursday? Well, Thursday was the tariff deadline. I think as we saw Thursday open, once again, market opened with Euphoria. There were all-time highs, and throughout the day, we saw the price fall, and fall, and fall. After that, well, that was quite a scary time, especially after market closed, because then we're talking about speculation. We're talking about what's happening. Are people certain? We saw the uncertainty rising, and then, well, lo and behold, Friday morning, we had tariffs. Tariffs returned. Can you talk a bit more about them?
Yeah, sure. So, before I get into that, I just want to connect this with the FOMC. So on before Thursday happened, there was also a dip that happened on Wednesday, the same day where the earnings happened for Meta and Microsoft. And on that FOMC meeting, Powell basically was quite hawkish. Hasn't been hawkish for a while, and his language was quite hawkish. He was quite adamant that he needed to see the data roll in, and currently, as it was speaking, the data was not favorable to rate cuts, and the market took that as a gut punch. And there was actually a huge sell-off during the Wednesday late trading hours, but it was eventually rescued by the earnings. And I think that fear of inflation due to tariffs really became magnified when people realized the taco trade did not work out the way they intended. Mm-hmm. And just to highlight what the taco trade is. Taco is basically saying Trump always chickens out. It's a term used to describe how he basically will continually extend the deadlines over and over again because he's pro-equity markets. He doesn't want, bond markets to soar through the roof. He doesn't want, market chaos. He's pretty pro-market that way. Mm-hmm. And while he did secretly or silently extend it to August 7th, so next week, he did raise tariffs on specifically Canada for political reasons to around 35%. And he raised tariffs on Switzerland 39%. So some of these countries had their tariff applied, today, and others are going to have them in August 7th. And many countries around the world are scrambling to figure out how they can negotiate and figure out what's happening.
Right.
The other tariff incident is basically the U.S. Making a post about how they're going to raise tariffs on India 25% because of them importing Russian oil, so due to the Ukraine war, so which is a different issue. Right. But essentially, there was just a lot of bearish news, and to make it more laughably bearish, during the late trading hours of today, a lot of crazy stuff happened. So just to pop some of them off, one of the board members on the FOMC committee has decided to,
resign.
They decided to resign, right? So what happened is that because that spot is now empty and FOMC interest rates depend on these 12 people to vote, someone is going to have to appoint that person. And I think markets freaked out a little bit when they heard Trump basically, having an open all-you-can-eat buffet and getting a person that might be more dovish than necessary to be put in the board. And that can kind of stack the card against being anti-inflationary, and that caused some fears as well. Another fear-based news was the fact that Trump announced that he was going to deploy 2 nuclear submarines close to Russia due to the Ukraine-Russian war. So as I was reading that, I literally saw QQQ going down. Now, whether or not that actually has to do with anything is
unknown.
Something that I'm not too confident in.
Right.
But it just adds a cherry on top on the sort of market chaos that we had today. Like literally any bad news we had, we got it. And to top it off, we had unemployment data that was also pretty terrible. So while the unemployment rate was pretty stable at 4.2%, and you kind of confirm that for me.
Yeah.
They revised the previous job numbers of the last 2 months to a net loss of 285,000. So they overestimated the amount of job creation by 285,000. And the job number that was posted this month was very cool compared to the estimated numbers. I think it was like 74,000 versus 100 something thousand.
110,000, yeah.
Yeah, 110,000. So the markets instantly reacted dovish because they believe that Powell potentially made a mistake. He was too harsh on not cutting in this meeting, and during that meeting they took a cut and a half away from September and October. They had to reprice those cuts back in because they realized just how much damage that the labor market is experiencing due to market uncertainties and trade tariffs due to the trade war. So all that bad news packaged into one box and sent straight into NASDAQ. I'm not surprised that NASDAQ is dipping, and honestly, I'm surprised by the fact that it's not dipping more. We could have broken even more supports here, but it was holding at some point. At some point, it sold, it hit the lows, and it just kept trading back and forth, and kept getting rejected from our KRM line.
Yeah.
But it stabilized at some point, and now we're just waiting for the market recovery, hopefully on Monday.
I mean, the thing is, right, here's where we're going to start talking about the future, because when the Liberation Day happened, February 21st, basically, or 20th, one of those 2 days, we saw the same idea, where there was one strange, large candle. Here we kind of have two, but overall, from there, things just went further and further south, because there was once again a situation of uncertainty. And, at the time, it was far newer. So countries were scrambling even harder to figure out how to respond to Trump and what was happening with the tariffs. So here's how I envision, 3 scenarios. And we can talk about this if you have any comments. It's going to be number 1, it's going to be a short-term blip. In a sense that, hey, the fears happened, but in a few days of choppy market, probably a slightly bearish market, things will consolidate quite quickly in a week or so, and will make its way up because, well, the biggest reason why, I think one of the bigger reasons why things are as far down as they are is going to be because of uncertainty. And that once there's more certainty, we might see consolidation and even towards recovery at the end of the month. I think that's the one future. The second future, I think that's the more scarier one, is even more chaos. There are already murmurs, and I don't know how serious we could take these murmurs, of other countries preparing to have their own retaliatory actions against the tariffs. And so that is something that people are looking forward to. There's uncertainty about is how are these countries that were tariff going to respond? For example, Canada is America's, is it number 1 or number 2 trading partner?
I think it's like number 2. Mexico has overtaken Canada. I can just double check.
Yeah.
But like it is a key,
partner. It's a substantial trading partner. Yeah. And so here we have now the key trading partner was tariff 35%. And for those who are not familiar with, the industry side of Canada and US, a lot of, for example, lumber or minerals are all mined in Canada, and they travel oftentimes back and forth between America and Canada for refining and being made into the products that we see on the markets. And so it's like oftentimes a process where you might have lumber chopped in Canada, processed at a mill in the United States or refining in the United States, comes back to Canada for the next step, goes back to US. So it's quite an interconnected economy, especially on the industrial side in some sectors. And here we have, the 35% tariff. And so the question is, well, what's that going to mean for America and America's trade? And number two is, what actions is Canada considering? And if Canada does do something, what would the impact of that be? And so I think overall, there's a lot of fear and uncertainty in the market of how the other countries respond. And I think if we see responses that are not favorable, that are not, I want to say that they were appeasing, but they're not, acceptable to the Trump government, it might become even scarier. And in that scenario, I can see a world where we see a repeat of what happened in February, end of February. We just see a downward momentum and a bearish trend for possibly weeks, maybe months, really not sure. And so that's the two, I think, scary futures. One is like the optimistic one. One is a short-term blip. The second, I think, is a longer-term fear. And I think third is, in my mind, the more reasonable one. And the third one is a mix of the two. So what I'm optimistic for, and what I'm kind of leaning towards, is actually a world where, yes, there will be uncertainty, yes, there'll be fear, and yes, I think we're prone for a downwards momentum for, I'm going to say 2 weeks, possibly 3. But I think at a certain point, there will be enough consolidation, and we will start climbing back up towards the highs. Those are my 3 futures. What do you think about them?
Yeah, so I have some thoughts on that.
Yeah.
So on your second point in terms of retaliation, my take, and I've written a long post about this. I'm debating on sharing this because I wrote it on Reddit.
Mm-hmm.
But basically, I personally think that from a geopolitical and economic point of view, I don't think a lot of these countries have a lot of leverage to retaliate against for the U.S. And this is a hot take on the internet, because a lot of people have a hard time understanding this.
Mm-hmm.
But essentially, the U.S. is the consumer of last resort. When you Google the GDP of the U.S., right, it's the first in the world, the largest GDP, and it's valued over 30 trillion. And its consumer market is second to none. Like it is the biggest consumer market in the world, and acts as a sink for all the products and services and produce that export countries have. So to export countries, if they were to retaliate against their largest customer, it would just compound the pain that those countries would experience, because a lot of these countries have employment dependent on exporting. So you have China with a lot of their production, manufacturing. You have Germany with their automobile manufacturing. Europe, as a whole, EU, and South Korea, Japan, and even Canada, right? Like 80% of our exports go to the U.S.
Yeah.
So what ends up happening is you can retaliate. That's not the problem. The problem is the pain that will be caused if you let these tariffs keep going up due to escalation. Because as a consumer market, we're simply not, speaking from Canadian, we're not big enough
Mm-hmm.
to absorb everything that we produce, because our population is too small. So we export it to a wider market, and even in terms of financial capital, a lot of our, money, and even in this podcast, we talk about QQ, like that's our main investment vehicle, right? So a lot of our capital is allocated in U.S. markets. Our financial system is very intertwined, and so they choose, they can cut us off from that financial system, and they can do the same with other countries who refuse to play the ball. So I think that for people who believe that retaliation has teeth, it might be painful for the U.S. from a certain point, like from in the initial stages, but at some point, it doesn't mean the countries that are retaliating will not feel pain, because those countries will have higher rates of unemployment, and they're going to have to find a way to absorb that extra labor. And because these companies or these countries are dependent on exports and manufacturing, and they're less service based, they will have a hard time making this transition in a fast enough pace in response to these tariffs. The second take that I want to talk about, and I'm just like trying to wrap my head about what I wanted to say, because this one is also a little bit complicated.
Okay.
Is that a lot of the countries that have struck deals with, like the EU, South Korea, Japan, those are the three main ones, and they're working on Mexico right now. They added just Vietnam already, but these countries are major. These countries make up the majority of U.S. trade if you exclude China.
Mm-hmm.
Like these countries, majority of their trade, and the only one that hasn't played ball yet is Canada. Mm-hmm. And I don't see us not playing ball if we were the most dependent on the U.S. I genuinely don't think the government, in any sort of way in Canada, would go out of their way to risk unemployment in the automobile industry and the steel industry, in any industry whatsoever, in order to make a political point, because that would be political suicide, to be frank with you. Mm-hmm. So if the U.S. has already agreed these lopsided deals, because these deals really favored the U.S., and most of these countries, they form the majority of U.S. trade, the only countries that's left is Mexico, Canada, and China. And I know they'll be able to strike a deal with Canada and Mexico soon. It's just a matter of when. I think they need pressure. That was the point of this deadline. Mm-hmm. But if they can address that, all the other countries, even if they retaliate, it won't make much of a difference, because the U.S. economy is not so trade dependent. Mm-hmm. So that is my biggest take on that. And I think people really do overestimate how dependent the U.S. is on importing, because most of the imports come from these major trading blocs. Mm-hmm. And most of these countries are U.S. allies, like military, security, politically. So I don't think they would retaliate in order to damage those relations.
But at the same time, I see your take, and I completely agree. I think the overall question is going to be, if the tariffs are here to stay, how are the markets going to price in the impacts? I think because especially when it comes to tariffs, I think when we see like a 35%, suppose that let's use that example, right? So now you're going to see over time. So first of all, there'll be an immediate impact. You'll see immediate deals, immediate prices rise, and there'll be difficulties there. Mm-hmm. Number two is going to be what is going to be the impact on that long term on the consumer, because most of the time the weight of the tariffs is most likely to be borne by the everyday consumer. And so we're gonna see, I think, in two waves. One wave is just like the immediate impact, and the second wave is a gradual, continuous pricing in of the impact these tariffs will have on the consumer and the economy in the coming months and maybe possibly years or so. The question really is how fast is the market pricing everything in? And so if the market is pricing everything in quick, and the impact of tariffs is outdone by growth, then I think the markets are poised, and we are probably on greener pastures. But if the market, it's not the case. If the market is either pricing it in too late and like a few months from now the impact really hits. Now we see that in the CPI, PPI, and all the other data.
Yeah.
What's going to happen then? I think at that point that'd be a a problem for the future. And so let's just see. I think let's just see how the markets react. I think the next week is going to be very important to see how the market is behaving, because I think a worry for me is that if the market, let's say the market accepts the trade for where it is, market consolidates and moves upward. Now, the question that remains in me is, does that mean the market has already priced in the impact of the tariffs in the future, or is the market reacting too slowly?
So that's a great question, and I think this is something that I consider myself, right? And I believe, and not the way I want to phrase it is like this. I think that the market has a certain risk tolerance towards tariffs. I think that they're okay if a country is tariffs at 10 to 15% because they perceive that as, that's unavoidable. That's a given. And even so, that was basically what they expected on Liberation Day as well. They didn't know it would be go beyond like 10 to 15%. And that's why the market crashed, right? Since then, a lot of these smaller countries had their tariff rates marked down by a fair bit. Like Lesotho, which is a very tiny country that can't possibly import enough products that the US can import. It was, taxed at 50%. Like that clearly didn't make sense.
Yeah.
But at some point, the Trump administration realized that was just a bit silly, so they made it more reasonable, around I think 15%. That became the rate, and you can check on that for me. But I think that the market's okay with 10 to 15% solely because I was observing the market reaction when the EU, Japan, and South Korean trade deals were announced. Like the markets kept hitting all-time highs despite the presence of tariffs. Like they were okay with that. But what they weren't okay of was their closest trading partner, like Canada, getting smacked with a 35%. Like that didn't make sense to the markets because it was very disruptive. It wasn't something they priced in. And now they're trying to price that in. But if we're looking from an inflation point of view, I think a good tool to use would be looking at the 2-year, 10-year inflation swaps. And basically what those swaps indicate is whether or not the markets is experiencing or predicting inflation in the future. And if you basically look at those inflation swaps, you'll see that the 2-year inflation swaps tend to be more elevated than the 10-year ones. And why is that, right? It's because they expect the inflation to be, quote unquote, transitory. They think that it's going to be temporary and it's a one-off because you can only raise your rates 50% once. Once that happens, the market and the economy can actually undergo a deflationary spiral because now the capital that is spent on taxes, well, that's capital that you can't use to consume anymore, and that actually contracts demand. So I feel that the market has not considered that yet, and the repricing that's going on is just a initial response to inflation fears that I think it is an overreaction, and hopefully we can see that confirmation when the markets potentially recover on Monday.
I mean, I think we both agree that we're probably hoping for the market to recover.
Oh yes, absolutely.
And in the short term, obviously, anything bearish would be bad news. And if it is bearish, it might last who knows how long. But at the same time, I do worry about like the longer term ramifications that this is going to have on the U.S. consumer, and how might that be reflected downstream? Because we might go back to all-time highs again in the short run, but then over time we might see a situation where we're just seeing the prices rise for everything, and they're not being as expected the U.S. production of the local commodities, or the commodities that were once. The idea of the tariff, right, is just to tariff the outsource the imports, so that there's more production in America to make to make people's make the products that are made outside. But if that does not happen for one reason or another, that's just going to be inflation, right?
Yeah.
I don't know.
Yeah.
I think the impact of tariffs are, I think, yet to be seen. We'll probably see the downstream effects they have probably like a year or two from now. So what do you think about that?
No, I think I agree with your sentiment. My biggest concern is what the price action is now, right?
Yeah, that's fair.
It's gonna take a while for markets to really process it. I think there is still hope for the taco trade, and we don't like using hopium here, but that has been a real pattern, and tariffs were genuinely delayed by like a week. So who's to say that it will get delayed by another week or even a month? And the only reason they delayed it by a week was because they wanted to change the pace and add some pressure, because some of the countries could have been complacent and taking their sweet time negotiating. So there's a lot of scrambling around with a lot of leaders trying to just get a hold of the administration right now to lock in the deal. Like, I was reading articles of how countries like Switzerland saying we thought we were about to clinch a deal, and then we get smacked with 39% tariff. Like, I don't understand. And then you had leaders in South Africa that are basically saying we will work very hard given the 7 days that we have.
Mm-hmm.
It's quite funny because you're basically routing up all these leaders from other countries and getting them to come see you. I think markets want to see results of that. I think if they see results, like deals actually being clinched last minute on the wire type of thing,
right,
then they'll start rallying, because then they'll see that his negotiation, his art of deal negotiation will give him fruit. And I think that one way to look at this is when the UK deal was agreed with the US, it really did mark the beginning of a bull run for the NASDAQ and for all the equities.
Right.
So if we can get that confirmation again, this time within maybe the next 7 days, we should be able to add some fuel to this recovery rather than just chop the books here.
So out of the three futures, what's the future that you think is the most likely? And
so I think that I can't read the minds of a person, unfortunately.
It's so chaotic. It's so uncertain.
It could go
really any way.
Yeah, it is very uncertain. So it can go anywhere, but I would wager that as long as markets see results, especially if some deal is made in the next week with Canada and Mexico, the markets will stabilize and this fear and sell-off will recover. And you can see that it's fear because there's a huge rotation of assets from risk on to risk off, like bonds and gold today. Yeah, to gold, right? So they both went up. TLT shot up and so did gold. So you can see that it wasn't some chaotic drawdown where everyone was just rushing to gather their money like we saw on Liberation Day. This was a serious rotation, and people were more ready this time, and there were a lot of funds that were hitting all-time highs that probably needed to take profits, and this is their moment. They saw things going down. This is their time to take profits, and I think that's what happened here.
Oh yeah, that was a huge sell-off, but like twice in the day, right? One at like 9:30 to 10 a.m. A second one in the afternoon.
Exactly, right? So there was a lot of rotation, and then in terms of projections of what can happen next week, looking at the data, I don't think there's any data that's very important, pertinent, that can really alleviate any inflation fears at this point. We just have to see whether or not there are deals being made, and I cannot stress how important that is right now.
Yeah, absolutely. I think that's like the number one thing, because I think like from what we saw in terms of how the individual equities the companies are doing, they're doing quite well, especially in the tech space, right? Because we had such positive momentum, such euphoria, just like
Yeah.
it's like the wind was taken out of the sail. But the momentum is still there. Like the good news is still there. So for example, I think AMD has a earning next week. I'm just trying to pull it up on my chart.
Yeah.
Palantir has an earning next week. Palantir's been doing really well. I don't know on tears this year. And so I don't know. I feel like the market is just like it's looking to grow, but I think what's dragging it down is the current geopolitics that's taking place in America.
Yeah, that's right. And we just have to give it time to settle down. Like it settled down before Liberation Day. In my opinion, it can't get worse. It literally cannot get worse than that. If it gets worse than that, I'd be honestly surprised. But on Liberation Day, things actually gap down by 6-7%. So when things really gap down, there's abrupt chaos. We didn't see that here. The candles actually still touch, funny enough.
Right.
In their own ways. So because of that, I feel hopefully bullish. But I'm also looking at Bitcoin right now, and Bitcoin is just not doing so well. It's still selling off. It's hitting our oversold zone. So again, that's a leading metric for risk appetite. Risk appetite is not good right now. Yes, we're still in bullish action. Markets are still bullish, but we are in consolidation now at this point, and I am worried about top. The other thing that I actually want to talk about is VIX. So I remember that we talked about VIX last episode, and how we teased that VIX was going to be very low, all-time lows, and it was a matter of time before we have to start worrying about what that entails. And lo and behold, VIX shot up through the roof today, didn't it?
Yep, it was like this. Like we even called it like last week's podcast. We said, hey, it's suspiciously low. When this happens, there's usually some kind of event which blindsides the market, and today ended up being that event.
Yeah, exactly. So that turned out to be prophetic. But is there anything else?
To be fair, it is still quite early in the VIX. So there's still like a lot of room for it to both grow up and down. And so hopefully, fingers crossed, it doesn't become a chaotic time like it did become in February, March.
Yeah, exactly. So who knows if the VIX will continue shooting up? I think if there's more uncertainty and fear, that can definitely be the case. But provided that this is the last of the tariff stuff and we get deals moving forward, we should be tentatively okay.
Presumably, this is the last time of tariffs. Presumably.
Yeah. Who knows? He can surprise us with another 30-day deadline, right? Like you never know with the administration. But yeah. So I think that if you want to lock in some, QQ or some risk on assets, this would be a good time because we're in major support zones. You're not hanging off a cliff. You can load up here, but not sizing completely, but sizing partially. This can help you.
I guess small portion. I think you should probably be very careful about Bitcoin now. I wouldn't. I think Bitcoin is the first asset to tank when the risk even falters. So Bitcoin, I think, should be just cautiously stay away. But if you do see a short-term opportunity, feel free to invest. But I think for the swing trade, the position trading, I think it's for now might be just a good idea to let it cool down, see how it progresses.
Exactly.
I think SPX same light as Nasdaq. I think it's completely. I mean, it's probably a good time to slowly scale in. I wouldn't, put a substantial portion.
Yeah.
And I think that's overall our cover of the market. Did you have any other topics to bring up?
No, I think we wrapped up all the important details. It's been quite a lengthy episode and an eventful week.
It's quite funny because last week's podcast we were all euphoria, we were all excited, and then we spent so long talking about the actual equities and the more micro and the technical as well as the fundamentals. And here it became just like a deep dive into geopolitics and macros. So quite a range. Yeah,
like we were nervous, about earnings. So we're nervous about how that can make or break the markets, but the earnings blew out the water except for Amazon. And the only thing that affected the markets was not earnings related at all. It
Yeah.
was the president
Yeah.
who had his tariff policies, right? So that is a blind sign. And
Mm-hmm.
it doesn't mean that things are bearish. It just means that the market is pulling back and it's healthy. You need this. If you don't, you'll get overstretched valuations.
That being said, I think we should all be on the lookout for a hedge against other
Yeah.
such events,
Yeah.
especially against other big chaotic events which might happen during the current presidency.
Exactly. Yeah.
I think that's probably it for today. We'll
Yeah.
call it
Yeah.
there.
Yeah.
Thank you so much
Yeah.
for
We can do it
watching.
there.
If you have any questions, please let us know. And thank you for watching.
Yeah, and please subscribe.
Of course. Bye bye.